Coming up on the program today, Nigeria's annual inflation rises to 12.13% in January from 11.98% in December. Ethiopia approves supplementary budget of $877.8 million. Plus, the United States eyes stronger business ties with Angola. Hello and welcome to Business Incorporated. I am Bisi Adibai. Well, let's begin the show with Nigeria's headline inflation, which increased by 0.15% to 12.13% year-on-year in January, and that's from 11.98% in December. On a month-on-month basis, the headline index increased by 0.87%. Data released by the National Bureau of Statistics shows food inflation rose to 14.85%, and that was due to increases recorded in the price of bread, cereals, fish, meat, and other tubers. Core inflation, which is measured by the average change in prices of goods and services consumed by people over time, was higher at 9.35% year-on-year from December's 9.33%. Urban inflation grew to 12.78% year-on-year from 12.62%, while rural inflation rose to 11.54%. Well, let's look at some numbers coming from the stock markets here in Africa, which were all in the red at intraday. In South Africa, the JSE index lost the most by 0.91%, and Nigeria's main index lost 0.08%. In Egypt, now the index shed 0.88% also at intraday. Kenya closed negative on Monday. We're still talking intraday numbers, but this time in the Gulf region where markets were largely flat today. In Abu Dhabi, the index lost 0.53%, while the market in Dubai was unchanged at about midday Nigerian time. Investors' appetite in Saudi Arabia was sour as the index shed 0.26% at intraday. Only the market in Qatar was up 0.69% at that time. And in Europe, stocks tumbled this morning following a weak handover from Asia as Apple's revenue guardians warning rocks electronic supplier shares and the coronavirus fears persist. Now, let's cross over to the Frankfurt Stock Exchange, where my colleague Conrad Busen is standing by to tell us more. Hello, Conrad. Now, let's begin with Apple rattling the markets with a warning that the coronavirus impact will reduce its revenue. And that's unable to say how much exactly. What's the reaction on the European trading floors today?
Well, it's a very negative reaction we are seeing here. Look at this. The German share index DAX jumped downwards immediately after trading started this morning, and this is where the market has been trading on since this morning. Apple is one of the companies, when it sneezes, a lot of other companies are getting a cold. Like Apple's suppliers, of course, many of the competitors. And of course, as this is due to the coronavirus concerns and the economic slowdown in China, a lot of other sectors today are being sold which do not immediately have anything to do with Apple, but which are in a comparable situation, like the car makers, for example, BMW, Daimler, Volkswagen, of course. They all have a huge amount of factories in China, many German suppliers as well. And all those shares are being in the red today. We should not forget, though, that, of course, the markets had been trading on record levels. Yesterday, the German DAX had reached a new record high intraday. The Swiss market index even managed to end trading yesterday on a record high. On such high levels, of course, the market is sort of vulnerable to some profit taking and to a bit of a shake-off.
Right. British bank HSBC also came out with another shocker. 35,000 jobs are likely to be slashed over the next 3 years. What's behind this, Conrad? Is Brexit playing any role with this?
BC, of course, HSBC is not sacking those thousands of people because of Brexit. But Brexit has contributed to a certain amount of uncertainty all over Europe and, of course, to the sluggish economic activity all over Europe. So indirectly, Brexit also is playing a role here. But generally speaking, it has to be said, HSBC, especially in its investment banking business, did not manage to become profitable, just like Deutsche Bank. Comparable problems here. And in retail banking, in particular in France and the United Kingdom, fierce competition is a problem for HSBC. You know, there are now many young banks, leaner banks that offer leaner products and services to the markets, especially in the UK. And many customers HSBC has lost to some of those banks. So it's really the big overhaul of the whole sector, the big transformation in terms of also digitalization, which is causing HSBC problems, and which causes it to streamline its operations over the next few years now.
Well, European Union finance ministers are meeting in Brussels and they're discussing ways to tackle the weak economic performance of Western European economies. Will Germany's government be convinced by its EU colleagues to spend more?
Not really, judging from the statements which have come out of Brussels up until now. The statement that I could find, which was issued by the chief of the Eurogroup, the Portuguese finance minister Mario Centeno, you know, the Eurogroup being the group of ministers of the countries that have the euro. It sounds broadly like it always sounds, very neutral, very diplomatic speech. He says the slowdown is still with us and we have agreed, we the finance ministers, to coordinate any need for a further policy response. If downside risks were to materialize, fiscal responses should be differentiated, aiming for a more supportive stance at the aggregate level. That sounds like the usual blah blah coming from Brussels. You know, of course something should be done if the economy gets into a crisis more, but this would be completely to the discretion of the national governments. So no convincing of the German government to spend more, or of the Netherlands, you know, those countries having budget surpluses. The ministers are not ready to do that yet. And one reason, of course, is Brexit. While, you know, the European Union is in the course of negotiating Brexit, they will want to avoid every headline, every story, every, you know, negative sentiment towards the European Union. And that could have been created if, you know, the ministers would have forced their colleagues from Germany and the Netherlands to spend more.
Thanks for those updates. We'll see you again tomorrow. UK employment jumped again in the final quarter of 2019, similarly defying a broader economic slowdown. However, total earnings growth, including bonuses, rose by an annual 2.9%, and that is its weakest increase since the third quarter of 2018. Our London correspondent Juliana Olayinka joins us now to tell us more about this. Good afternoon, Juliana. Official figures released today by the Office for the National Statistics shows that unemployment decreased by 16,000 to 1.29 million in the third quarter of 2019. At the same time, average weekly wages in the UK have returned to pre-economic crisis levels for the first time since March 2008. Can you flesh up all this data for us?
Good afternoon, Bissy. Well, you know, this labour market data that's just come out of the ONS this morning is good. It's really strong. It lifted the sterling, and it's a great story for Boris Johnson just ahead of the March 11th spring budget, because it seems as if business confidence is returning to the UK once again. The 3 months to December, over 180,000 people returned to work. So we've got a record number of people in work at the moment, and that's 32.9 million. Now, economists, they are crediting Boris Johnson's election victory in December. I predict they'll be doing that for at least the next 12 months. And also, it's that consumer confidence as well. People are going out more, people are spending more, and because people are spending more, businesses are employing. It's also been very good for women. Women, over 100,000 women entered the workforce between those 3 months, which means at the moment over 15 million females are in employment. So not much to say. Of course, the average wage growth, which you just cited there, even though it is growing, it is still at low levels. And people have been citing that the pay packet, so what you're receiving at the end of the month, could do with a boost. But overall, this labour market data is seen as a good thing.
It's good to finally have some good news coming from your end there. But let's get an update on the HSBC job cuts, which is, of course, not so good news. The Workers' Union Unite is calling for talks with HSBC executives to discuss how the UK staff might be affected by the bank's impending move. Do you think that the bank will listen to the union?
Gosh, in short, absolutely not. This is a capitalist society we live in. But, you know, for Unite, it's a good thing. It's nice that Unite are trying to support these staff members because, you know, HSBC, this isn't the first time they've had a huge shakedown. Over the past 10 years, they've had a shakedown like this at least 3 times. In most recent times, it was in 2015, and they culled about 8,000 jobs across the UK. And it's really the investment arm of this big global bank that will get the chop. So those 30,000 jobs are expected to affect a lot of people in Canary Wharf, which is just a stone's throw away from where I am. But it's not just what's happening in the investment arm of the business. HSBC's biggest customer reach is in Asia. They've really suffered over the Hong Kong crisis, which happened last year over a few months. And as well, COVID-19 is already starting to chop into their 2020 budget. But HSBC aren't alone in this. We've also seen similar cuts with Deutsche Bank, also Santander are cutting down. And it's just very competitive at the moment. The fact that interest at their lowest levels that they've been in about 10 years makes these big banks, it makes it more difficult to get a big profit for these big banks. And also as well, there are a lot of cheap mobile internet banking facilities available for customers, whereas before you had to use a traditional bank. That's no longer the case anymore. So for them to make more profits, HSBC believe that they have to cut these jobs, and it's going to be a painful 3 years for HSBC employees.
Very, very painful indeed. Now, just before you go, Juliana, give us a sense of what intraday numbers are looking like at the moment, talking about equities and the currencies market.
Well, as I said, the UK labour market, that really pushed up the sterling. And also as well, we had a first tweet by the new Chancellor of the Exchequer, Rishi Sunak, just confirming that, yes, indeed, there will be a budget on March the 11th. That pushed the currency market up. But at intraday, let me get my numbers out for you, Bissy. The all share is down 0.55%. The FTSE 100 is also down by 0.67%. And the FTSE 250 is down by 0.33%. The pound is up on the dollar by 0.21%, also up on the euro by 0.28%, and up on the Japanese yen at intraday by 0.09%. Thanks, Bissy.
Thanks, Juliana, and do enjoy the rest of your day.
Thank you.
Shares in Asia mostly fell today as the new coronavirus outbreak continued to roil companies amid expectations that it would cause a slowdown. Hong Kong's Hang Seng Index was down 1.36% and shares in mainland China edged up. The Shanghai Composite closed flat to 2,984.97, while the Shenzhen Composite jumped 1.12%, closing at 1,856.56. Japan's Nikkei 225 tumbled 1.4% to 23,193.8, and the Topix fell 1.31%, closing at 1,665.71. In South Korea, the Kospi slipped 1.48% to 2,208.88, and Australia's ASX 200 declined 0.16%, closing at 7,113.7. And in the U.S., stock index futures were lower this morning. At around 3:15 a.m. Eastern Time, the Dow futures dipped 154 points, showing a negative open of more than 141 points. On futures on the S&P and Nasdaq were both lower. Apple, of course, has cautioned that it does not expect to meet its quarterly revenue forecast, citing slow production and weakened demand in China as a result of the coronavirus outbreak. Still to come on the program, we'll look at updates coming from the domestic market. Please stay with us.